Have you ever wondered how to make your money work harder for you? Do you dream of financial freedom but aren't sure where to start? Well, today's your lucky day. In this video, we're going to dive deep into something that could change your financial future forever. We're discussing the 6 best Fidelity index funds to buy and hold forever for high growth. Introduction to index funds. First, let's break down what index funds actually are. An index fund is a type of mutual fund or exchange-traded fund, ETF, designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. This basket could be anything from the entire stock market to a niche sector like technology or healthcare. One of the primary benefits of index funds is diversification, which can lower your risk. Since you are investing in many different stocks or bonds through one single fund, you don't have to worry too much about the performance of each individual security. Instead, you rely on the overall performance of a broader market index. Why choose Fidelity index funds? Many people wonder why they should choose Fidelity for their index fund investments. Fidelity is one of the largest and most reliable financial services providers in the world. With low expense ratios and a long history of excellent customer service, Fidelity is a go-to for investors looking for reliable long-term investment options. 6 best Fidelity index funds. Now let's get into the exciting part, the 6 best Fidelity index funds to buy and hold forever for high growth. 1. Fidelity 500 Index Fund, FXILX. The Fidelity 500 Index Fund aims to replicate the performance of the S&P 500 Index. The S&P 500 Index includes 500 of the largest companies in the United States, so by investing in this fund, you are essentially buying a piece of some of the most reputable and established companies out there. This fund has a very low expense ratio, making it a cost-effective way to invest in the overall market. 2. Fidelity Total Market Index Fund, FNCMX. Next, we have the Fidelity Total Market Index Fund. This fund aims to track the performance of the entire U.S. stock market, including small, mid, and large cap stocks. It offers even more diversification than the S&P 500 Index Fund. Because you are investing in a broad mix of companies, you're spreading your risk while still tapping into the growth potential of the market. 3. Fidelity NASDAQ Composite Index Fund, FNCMX. For those interested in technology and innovation, the Fidelity NASDAQ Composite Index Fund is an excellent choice. This fund aims to mirror the performance of the NASDAQ Composite Index, which is loaded with tech giants like Apple, Amazon, and Microsoft. If you're looking to invest in the future of technology and innovation, this fund offers a focused yet diversified way to do so. 4. Fidelity Zero Large Cap Index Fund, FNILX. One of the standout funds in the Fidelity lineup is the Fidelity Zero Large Cap Index Fund. What makes this fund unique is that it has zero expense ratio, meaning you pay no management fees. This fund aims to replicate the performance of large U.S. companies. With zero fees, more of your money goes to work for you, making this an attractive option for cost-conscious investors. 5. Fidelity U.S. Sustainability Index Fund, FNILX. Next, we have the Fidelity U.S. Sustainability Index Fund. This fund focuses on companies that meet high environmental, social, and governance as ESG standards. With increasing awareness about sustainability and responsible investing, this fund not only offers the potential for high growth, but also allows you to invest in companies that are making a positive impact on the world. 6. Fidelity Real Estate Index Fund, FNILX. Finally, let's talk about the Fidelity Real Estate Index Fund. This fund aims to track the performance of the MSCI USA IMI Real Estate Index, which includes a broad range of real estate investment trusts, REITs. Investing in real estate through REITs can offer high growth and income potential, especially in a low interest rate environment. The power of compound interest. One of the key reasons to invest in index funds for the long term is the power of compound interest. By reinvesting your earnings, you can grow your investment exponentially over time. The longer you stay invested, the more your investment compounds, thus maximizing your returns. Why buy and hold? The strategy of buying and holding index funds is based on the principle that markets generally rise over the long term. While there will be periods of volatility and downturns, the overall trend tends to be positive. By holding on to your investments, you give them the time needed to ride out short-term fluctuations and benefit from long-term growth. Cost efficiency. One of the biggest advantages of investing in Fidelity index funds is the low expense ratios. Low fees mean that a larger portion of your money is actually being invested rather than going to management costs. Over time, this can make a significant difference in your overall returns. Automatic investing. Fidelity offers automatic investing plans where you can set up regular contributions to your chosen funds. This is a great way to make investing a habit without having to worry about market timing. Setting up an automatic investment plan helps in dollar cost averaging, which can lower the average cost per share over time. Tax efficiency. Many of the Fidelity index funds are also tax efficient, meaning they are managed in a way that minimizes capital gains distributions. This can be particularly beneficial in taxable accounts, as it reduces your tax liability, allowing more of your money to stay invested and grow. Performance history. It's also worth noting that many of these Fidelity index funds have a strong performance history. While past performance is not indicative of future results, historical data can offer some reassurance about the fund's management and long-term potential. Risk management. By diversifying your investments across multiple index funds, you can manage risk more effectively. Diversification allows you to spread your risk across different sectors and asset classes, reducing the impact of any single investment's poor performance on your overall portfolio. Retirement planning Fidelity index funds are also excellent choices for retirement accounts like IRAs and Roth IRAs. The long-term growth potential and cost efficiency make them ideal for building a robust retirement portfolio. By regularly contributing to these funds, you can ensure a more secure and prosperous retirement. Dividend reinvestment. Many Fidelity index funds offer dividend reinvestment options. This means that any dividends you earn are automatically reinvested into the fund, allowing you to buy more shares and grow your investment even more. Investing in Fidelity index funds is a smart and effective way to achieve the long-term financial growth. With their low costs, diversification benefits, and strong performance history, these funds offer a reliable path to building wealth. By focusing on the 6 best Fidelity index funds to buy and hold forever, you can create a balanced and profitable investment strategy that stands the test of time. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more finance tips and investment strategies. Don't forget to hit the bell icon so you never miss an update. And if you have any questions or topics you'd like us to cover, leave a comment below. We love hearing from you. Happy investing!